Okay, thank you. So in a minute we're going to open it up, but I just want to start off with, as you say, just as I hear it all, it immediately becomes a great idea, and all you see is complexity. So you say DFID has a role, but it's not there to pick winners. It's not there to subsidise companies. But actually, how do you get involved? Because there are an increasing number of very large multinationals that, to different degrees, are taking this more seriously, are recognising, actually are making really actually quite strong commitments to create change amongst hundreds of thousands of farmers through its supply chain, right down to the sort of the nth degree. So they're doing that anyway. So do you support them, or do you say actually we ought to be looking at the areas that aren't working and trying to bring them up? It seems very difficult. How do you pick? If you're not picking winners, how do you get a grip of that? I mean, that's what I'm feeling difficult, saying, great idea. We're living in a world where everything is going to become more collaborative. We can sense that, where those sort of boundaries between NGOs, business and government are starting to break down. But actually, they are still very, very different sectors doing very, very different things with very different purposes behind that. So some people accuse DFID of becoming more political. Business is still about making money. NGOs are still there about supporting those the excluded. How do we bring all those things together in any meaningful way? So Lindsay first, and then maybe Jonathan and Christopher.
I mean, I think these are issues that we absolutely struggle with. I think that DFID's role is really to try and reduce risk. Now, that may just be in terms of providing some seed funding to overcome some sort of initial risk. It may be about information flows. It may be about the enabling environment for investment. It may be about signposting businesses to concessionary finance or finance flows. So I think there's a role for DFID to encourage companies who have understood the impact that they can have on poverty reduction, and to make, as I said, sort of catalytic short-term interventions to encourage them in that sense, and also to provide them with more information on the impacts that they can have on poverty, because yes, we are still there is a convergence of terms, but we're still the experts on poverty reduction, and they're still the experts on business.
And so one of the things about DFID is saying it wants to increasingly put its funding to see what is the bang for your buck, and it's all around measurement. But how do you? I mean, this seems a really difficult place to bring sort of measurement. How do you know what difference you're really making, as opposed to it was going to happen anyway, or it seems a very, very difficult ground to sort of find any sort of structure around.
Yes, I mean, yes, it is. It's hugely difficult, and we haven't cracked it yet, and we know that we haven't cracked it. But I think that we are putting more and more money into research and trying to understand the impact of this. And it's great that books like this and work that IDS and IIED are doing are kind of highlighting some of the success stories. But yeah, we don't have an answer at this stage.
And Christopher and Jonathan, just come back. I mean, one of the history of development is littered with new ideas that have were going to save. What was the title? Which was going to defeat poverty, make it history, and all that. And each one has fallen on hard stones. So, you give some of the positives and negatives, but actually, how do we deal with this level of complexity?
Well, maybe start off by saying I think doing business is a fairly old idea, and traditionally quite successful in generating wealth and employment. And thinking about maybe the idea about picking winners, I'd suggest that perhaps it's the failure to pick winners on the part of the development community, the donor community, that's seen the landscape littered with failed projects. Personally, when I walk into a Tanzanian fishing village or an Ethiopian coffee growing village, I don't feel that I'm meeting with huge groups of latent entrepreneurs who, if only a white guy came along and gave them lots of money, they would be running businesses. And so I think to an extent it is necessary to pick winners and to work with the people who are most capable within these communities of taking these things forward.
But and Christopher, I mean, one of the things about markets are supposed to work in the way. So if there's a product and there's a market, those things would naturally come together. And that's how markets work. Markets aren't artificial, where you're trying to generate markets artificially. So one would argue, if the markets don't exist yet, that's because they don't deserve to exist. So how do you deal with this idea that if markets work, the fact that that bottom billion rather, actually you're never going to help them, because actually, in the project we're working on, let's say the Guardian's working on in Catine, it's too far away from existing markets. It's very difficult to actually create change, because if it was close to the capital where you're going to export, then those farmers do well anyway. And actually, the markets you're reaching are the markets that don't have that capability to progress.
Yeah, I think you put your finger on one of the desperately difficult choices, because there is a choice between when you're looking at a group of entrepreneurs at a geographical area, is it somewhere where nothing is going to happen? Is there a reason that the market is not there? Very rarely is it not there, but not functioning well. Or is there what we call a market failure? Is there something going wrong, like a lack of information or a small piece of infrastructure which, if corrected, would allow people to integrate on much better terms with the market? I think in the majority of the cases where we're working, it isn't the issue that people are disconnected from the market. They are selling a huge sack of bay leaves for $3. It takes two days to walk down the hill. They're integrated with the market, and you're buying that bay leaf in a supermarket. The point is that they're not integrated on beneficial terms, and I think that decision about is the fact that they are not benefiting from the globalization process. Is it inevitable? Or I think in more often it's a case that something is going wrong, that's stopping the market doing what it's done in very large parts of the world, which is to pull people kicking and screaming out of poverty at rates of pay which we would regard as very low, but allow people for the first time to escape poverty on a sustainable basis.
So before I throw it open, Lindsay, I just want to bring back on this. So there's that whole idea that, you can pull levers at a big level. You can talk about government regulation, you can talk about what DFID can do, you can talk about what big companies can do, but the problem is always down on the ground. It's always the fact that it's not often the big levers, it's about being able to get to that place where you can actually find out that actually it's not just a failure and that nothing can be done, but where something can be done and then making it happen. So it's at that granular level that you can make the difference, but it's always that's always so local. It's very difficult to act always in a local way. Governments like to act on a big level that hopefully filters down, but this is needing to act at that local level. How can you get away from existing value chains which are working already, big companies already are working with areas that work, to those areas that teasing out those areas where it could be better, but actually how do you reach them? It feels that that's what always gets left out, is how do you reach markets? So can you answer that first, and then maybe...
I think briefly it's about working with companies who have links into those areas and establishing ways in which they can they have to create a business case for sourcing from these areas. So it might be security of supply, it might be diversification of their product base. There has to be a reason for companies, intermediaries to invest in these poorer communities, and it may be that DFID, by investing in infrastructure or by investing in the enabling environment, business environment, can sort of overcome some of those risks. Providing catalytic funding can overcome some of those risks to encourage intermediaries to then go into those communities. We can't be the intermediary that goes into those communities and creates a market.
But often those companies have already got their supply chains which particularly exclude those areas which are the harder to reach. So why would they go to that harder to reach? They've already got their supply chains. What they're trying to do is actually make sure their long-term supply chain with their existing customers is working. But the supply chain works, that they're not going to. How do you get them beyond that point where that's profitable to us to actually we'll go to that next community 5 miles further down the road, which is actually not profitable. That's what I don't get.
And that's the hard. I mean, that's significant infrastructure investment. That requires a lot of money to get over that hurdle.
Christopher, how are we going to reach that? How do we get to that next community?
I think it largely depends on the sector. There are some good examples in cotton in Tanzania where even the remotest of villages need to be included in the supply chain, because most of the ginning companies are working way under capacity. So if they want to buy cotton, then they need to find a way to get out to the most remote villages, even if that's more costly. But thinking about how to reach markets more generally, how about we start with the market? So rather than thinking about the production end of things, thinking about the approach that ODIapos, the Sustainable Dutch Trade Initiative, are taking at the moment, they're talking about market transformation. And they're working with players like Adidas, IKEA, some of the world's largest companies to completely transform the way they look at markets and the way they source. And then that pull, if you like, is being transferred down the supply chain, and then you start getting into some of the smaller communities. And the second point I would make is that we talk about markets, we think a lot about global companies, but there are regional markets and local markets, and they're very much integrated into local communities.
Okay, great. We'll throw it open. The Guardian is now officially a digital-first company, so I'm going to take the first question from the Twitter feed, just to prove that we can all be, just because you're sitting here doesn't mean you get a preference. So first question was actually around the role of mobile phones and the role of technology in reaching these markets. So Lindsay, what's the ability for technology and the fact that mobile phones are increasingly available and accessible for market transactions to make a difference? Have you been looking at that?
I think there's a huge opportunity for technology. Mobile phones can't be the panacea for all development ills, but certainly market failures such as information flows. There's huge numbers of projects that have worked very well in giving farmers market information to allow them to negotiate on better terms, for example. So, I think there's definitely a role for mobile technology. There's also ideas around providing crop insurance that you can access through your mobile phone. So there are definitely opportunities.
Okay, and that was a question from Michael from the GSMA, which represents mobile operators worldwide, so thank you for that, Michael. Okay, we've got a question from here. If you can just speak into the mic and say who you are and who you represent first before the question. And just for questions generally, if you can keep them short and to the point so we can get as many as possible. Thank you.
Hello, my name is Claire Hicks and I work for the Small Foundation and Self-Help Africa. I just wanted to pick up one specific point in the presentation, which was that you said incomes increased in Asia. Sorry if I missed it, but could you explain whether that means that they didn't increase in Africa and why that was? The second brief question was, we are talking about supply chains, but obviously they operate in a bigger economy. And I'd be interested to hear your views about the current level of donor and government investments, particularly in Africa, and how low levels of investment in agriculture, whether they limit the capacity for supply chains to expand.
Okay, who would like to answer that?
Shall I have a bash at the first one? Well recognised. No, there wasn't very much. There was a small income gain in Mali. Households of 17 on average, and annual income increases of about $20. So do the maths, it's very, very small. In Tanzania and Senegal, we told the truth, it didn't work. And it didn't work for a range of reasons. I guess most bluntly, there were problems with the capacity of our local partners. The ideas that were being piloted weren't great, and we were unlucky. It was a convergence of those three. What was interesting was, why do you not read about development failures more often? And I'm beginning to get a hunch, because it's a lot easier to fake success than to tell the truth about failure. And I don't think that we necessarily learn more from failure than we do about success. That'd be a slightly depressing outlook on the world. But we do learn from things that don't go well, and the development industry is almost pathologically unable to say, for a whole range of incentive frameworks that my political economy colleagues will talk very eloquently about, it's very, very hard to say it didn't work, and it didn't work in Tanzania and Senegal.
Yeah, and I really like that, because I mean the whole purpose again behind the Guardian's Catine project was telling the truth.
Yeah.
It is complex, it doesn't always work, and there's that failure. That failure of honesty actually leads to a failure of that this desperate need to bring money into the sector means actually the authenticity can sometimes be lost in the process. And very quickly, someone to the second part of the question, which was around what was your second part? Very quickly.
It was basically not meeting Maputo agreements, donors under investing in agriculture. Does that limit the capacity for us to expand?
Just really briefly, yes, it does, because there has been chronic underinvestment in agriculture. But actually, there's some work that's recently been going on in the Institute where it's not as bad as all that. It's partly that a lot of support to agriculture falls outside the category, the DAC category, the international category for agriculture. So there's a lot of stuff that's going on, like a lot of the work we do, like a lot of infrastructural work, which is actually supporting agriculture, which doesn't fall within that category. And secondly, I think that CADAP and a whole range of other processes have really encouraged, together with the price hike, it really frightened a range of governments into, for the first time in probably 20 or 30 years, properly investing public funds in agriculture. So I think looking backwards, you're absolutely right. Looking forwards, I think it's a bit more hopeful.
Right, there are lots of questions, so we're going to be very quick. The gentleman here in the front, if you can get the... Yes, you can go first, and then you.
Okay.
It's okay, very quickly.
I'm very struck by the fact that all of the speakers are promoting top-down corporate-led, Western corporate-led value chains. If I work, I'm sorry, Joe Hanlon, Open University, Southern Africa. Why are you not supporting domestic government-led value chains, which were really important in Europe a century ago, which were really important in Brazil, and which will promote the new kinds of the bulk commodities in Southern Africa and the commodities that are being exported to China, for instance?
Okay, that's great. So there's the whole issue of international trade versus domestic trade, which I think we covered a bit, but Lindsay, very briefly, what's the how do you think about that?
Yeah, apologies if you've got that impression. That's not the impression that I wanted to give. We do speak to multinationals, but our country programmes deal very much with regional and domestic trade markets, and that is absolutely a part of the picture.
And did you want to add something very quickly?
Very, very briefly, yes, sorry if it wasn't clear enough, but one of our main findings in certainly the material that went into the book was that sometimes forget global markets and look at the local market because of the developing middle class, because of urbanisation and so on and so forth.
But it's an easy mistake to make. Okay, yes.
Phil Sigley, Chief Executive Federation of Cocoa Commerce. We've been trying for many years to put forward the mainstream position in relation to cocoa market development. Now, if we just take the points about infrastructure...
I want you to be very quick, please.
Well, I'm afraid it can't be that quick if we want to deal with a serious issue. What we're talking about is DFID and other donor involvement and the platform for sustainability, for example. It's dealing with those infrastructural issues and understanding the markets that DFID, particularly with me, and maybe Agence Française Développement, have been reluctant to do, and I hope that this book signals a bit of a change. But if you look at the log frame, for example, portfolios that exist in the in Ghana, for example, where you're looking at district assemblies, you see where failure to meet MDGs in the rural sector is actually happening. So that the current DFID policies have encouraged urban drift, it's encouraged all sorts of other issues. Now, what we're saying, what I saw...
No, I'm going to stop you there. You can ask a question now.
My question is, why is it that donors do not work collectively to address that situation on the log frames, which is gaps in infrastructure? And I have seen DFID go in, do a job, tick boxes. Danida went in the same district assembly, and it's in that area of cooperation as a platform to underpin the private sector development.
Okay, Lindsay.
I'm afraid I can't comment specifically on cocoa market.
But the general principle.
I mean, we do a lot of work on infrastructure. The Private Infrastructure Development Group has been operational for 10 years and is about leveraging private investment in infrastructure, and is entirely driven by the private sector. So we do a lot of work in infrastructure.
Okay, I'm going to take a quick question from the Twitter feed, which is Camilla Haddad from the Green Economy Coalition. Do you have any success stories in addressing the gender issue in the value chain? So, I mean, it was really interesting. What you were saying is you mustn't make a default by saying gender has to be included, but often it's included at the end. So how do you strike, are there any success stories, but also how do you strike a balance? If you say you're not going to make it a default position, how do you actually generate change?
I think some of the defaults do work. So including women in, for example, committees can work. My point was more that we shouldn't assume it will work, because being there is not the same as participating, and participating is not the same as gaining from that participation. And so what we found is that there has to be a really, really strong analytical background to intervening in the first place. And then when you intervene, you have to really look beyond the value chain and beyond how many people, the kind of process indicators, how many people are in your meetings, how many people have you trained, and look at what's actually happening at the household level. And yes, sometimes being in a group and having greater bargaining power can change what goes on within a household and within communities, but it's not a given, and that was our point.
But your key point is included at the beginning of the process as part of the process rather than at the end, and then trying to do something about it then. So,
Yeah.
Okay. Are there any questions? Yes, the lady at the back here. Can just wait for one moment while we get you the mic, and if you can say who you are and where you're from.
Hello, Christina Archer, The Body Shop. Given that many of the bottom billion will not have access to productive assets, such as land, for example, I'd be interested to know whether the researchers have looked at the issue of wages and payment of decent wages within supply chains, and whether DFID is doing any work on promoting more sort of fair. I'm not even going to talk about living wage, I'm going to talk about minimum wages to begin with, but the question of wages and payment of better wages for lifting people out of poverty.
Okay, but before they answer that, I want to ask you a question, which is, you've heard what we've said so far from a corporate side and from a campaigning corporate side. What do you see as part of the answer to the question about the role of corporates, and what more can be done?
I think what I've seen missing over the last few years of being involved in this sector, because I was involved for 15 years in the development sector myself before I crossed into the corporate side, is the lack of sort of a coordination to try and bring awareness into the demanding public. And so with many corporate organisations, I hear that, well, the demand's not there. So in terms of securing supply chains, that is definitely becoming a very key issue that is driving many companies to, as you said, and as the research has shown, to forge deeper relationships. But I think that we also need to be doing some work in terms of raising awareness from a public, so that pull factor is also there. The other thing, which I haven't sort of heard much about, which I guess could be a second question for DFID maybe, is we've talked a lot about donors, but in terms of promoting business, what work is there in terms of a joined up government? So in terms of the Department for Trade and Industry that is working with businesses trying to set up overseas, what linkages are there to promote better business practices for companies that are seeking?
Great, thank you. So, Lindsay, can you answer the point about wages and about joined up thinking? And then, Jonathan, I want you to answer that bit about wages as well.
So, in terms of DFID's work on decent wages, we've been a long-term supporter of the Ethical Trading Initiative, which I'm sure you're well aware of. And we also have, in the last couple of years, set up a challenge fund specifically on the garment sector, called RAGS, which is looking at better working conditions. It's challenging international supply chains out of Bangladesh and India into the UK, looking at how they can increase working conditions in those, so not body shop relevant, but garment relevant. In terms of
joined up
government, it's a good question. We are working with UKTI, UK Trade and Industry, Trade and Investment, which is as a body that's FCO, BIS and jointly led, and they are working to promote investment into Britain and exports from the UK. And what we're working to do is to give them more information about better working practices, inclusive business models, not that we particularly push it, but the corporate social responsibility model, so that those companies who are going out and trading in developing countries have got more.
That sounds like joined up information, doesn't necessarily mean joined up thinking. I mean, joined up thinking is actually on a deep level, how can departments work together? I mean, is there something more to be done there?
Well, we have there's a challenge, which is that DFID can't promote British companies over other companies, and UKTI exists to promote British companies. So we can't, we don't have, there are overlaps and there are areas in which we can share information and work together, but we don't have common objectives.
Okay, and Jonathan, just going back to that issue of fair wages. So, you know, when you're getting to those hard to reach groups, how do you take into account the whole issue of wages there, fair wages there?
Yeah, I think it's a great question, and I think that the comfortable thing to say is that clearly there's a demand push. I mean, you can see campaign in Primark, a whole range of different organisations where consumers have pushed corporates to take much more notice of minimum wage legislation, factory regulations within the source markets. The comfortable thing to say there is that's all great, and it's good and should be extended. I think in the context that we're working in, we weren't working with people that were in factories earning $1 a day, sitting around about the poverty level. We were working in places where a whole family might have a cash income of $100 a year, you know, miles and miles away from anywhere near the poverty line, well below it. And they didn't get wages because they weren't employees, they were entrepreneurs.
I think just putting a question.
Yeah.
Can you speak through the microphone? And then we're going to move on very quickly because we haven't got much time.
I appreciate that you weren't looking at factories, but I am working with quite a lot of intermediary groups and agriculture supply chains. And at the bottom of the agriculture chain, you don't have individual farmer families, but you have day labourers who are working on plantation style or working for people on their farms for a daily wage. So it still is not talking about factories, but still talking about agricultural value chains, where at the bottom, the poorest people who don't have land have to work on other people's land.
Okay.
So how do we ensure their wages are fair?
Yes, so.
Yeah, and I was going on to the plantation point. Absolutely, and I think the where development should be is that you're getting the demand pull, and the real risk when you increase wages in a plantation is that poor people are going to lose out. They're going to get pushed aside, and the best qualified people are going to snaffle the higher wages. And I think absolutely where the development sector should be is to make sure that when a benign impact, like an improvement in standards, it does not exclude the poor and end up actually creating greater poverty rather than the intended effect of the consumer, which is actually to help people.
Okay, we're going to have a very slow Mexican wave, so I'll take one more question here and then we'll slowly move back over to this side. So who would like to answer the question? You, okay?
My name is Mikael Groth. I'm a forest economics consultant, used to work for the World Bank, DFID and other agencies. I wonder, in order to encourage the private sector and in order to create more jobs, and after all, it's the private sector that's lifting hundreds of millions of people out of poverty in China and India. Could we learn from the European Union and their regional work? I believe if I put up a business of any kind in Wales, for example, I get a subsidy to do that. And a subsidy like that could be according to how many jobs you create. Just a question.
Okay, Christopher.
Yes, within our program, our involvement with subsidies was relatively limited. We'd mentioned the case of the incense sticks. I think you're right. I think that can be a powerful tool for encouraging startups and business, but it has to be done well. And going back to my point about when it conflicts with other government priorities and initiatives, it has to be joined up. There are different ways of subsidising the poor. That's one way. As I said, another way is pure old social protection, handing people money in order that they can get the assets that they can then participate in business and productive activity. So I think if it's thought through and if it's joined up, then of course that can be.
And Chris, but just going on from that point, one of the issues so you raise is that often policies are in conflict with each other. How do you go about dealing with that? You know, how do you help generate that joined up thinking?
Maybe that's more a governmental.
Okay, Lindsay, how when you're dealing with donor nations, how do you deal with those different pulls and pull factors?
Well, I think John mentioned the Donor Committee for Enterprise Development. I think there's a lot of work is going on trying to make sure that there's coordinated approaches, and that is an ongoing challenge. I just wanted to come back to the question and say that there's increasing work happening on output-based aid and looking at mechanisms to incentivise results. So, for example, setting up job training in Nepal, and the organisation that's running it is then funded on the basis of the number of jobs that they create. So there is a shift towards looking at output-based aid as an incentive.
Okay, gentleman down the front here, if we can have the.
Thank you. It's Lewis Temple from IDE. A question about the different models that you looked at, and whether a key factor for success was small producers' ability to be more competitive than perhaps large producers. I thought perhaps your example of flower seeds could be one, but whether there was any other factors there. I mean, I've seen in Ethiopia onion seedling producers being very successful at a very, very small scale because of the sort of their ability to nurture and care for plants at that very early stage.
So that's really interesting, because the general idea always is economies of scale, the bigger the better. Is that always the case, Jonathan?
Yeah, well, I think the bigger the better in some parts of the chain. I mean, when you're perhaps processing or exporting, but I think absolutely the only rationale for engaging with small producers is if they can be competitive, so that there's a viable business proposition for engaging them. And what really worried Chris and I during this study was that we were battling this sort of half a century of development speak, where you really only had to keep something going for a couple of years for the length of the project, and you could put all kinds of hidden subsidies in, and then you could say, well, that worked, walk away knowing that it would collapse, and then you could document another success. And so I think that, I mean, it sounds sort of nasty and right wing, but actually you have to be competitive, because otherwise you're messing up with people's lives. And often where people are investing their own resources, if you get a collapse like what I'm describing, people are worse off after a development intervention than before it. And that's the real tragedy of development, that it can, on occasion, not even be neutral, can be negative for the livelihoods of poor households.
So a quick question. So how do you deal with that conflict? Because so if you want to play in the markets, you've got to be up for the markets.
Yeah.
But markets are often very exploitative.
Yeah.
So it's very difficult to say you've got to be good enough, but actually you've got to if you want to play with the big boys, you've got to sort of, you've got to face that.
Yeah.
Whereas actually there's that nurturing between. It seems very hard to say you've got to be competitive, and I'm just trying to think that gap between how do you close that gap? Is it just about a 2 or 3 year sort of support process, like sort of we were talking about EU, where it would, what's that way? How do you determine what's competitive, and how do you help them meet that gap to actually become competitive?
Yeah.
It just seems very difficult to know, to find that spot.
Yeah, no, I think it is, and I think it's exactly that sweet spot that we're talking about. And it's taking the question of the EU. how do we take the best things that the EU has done, which is, I think, some of the structural funds, fantastic. You know, you look at a city or a region that's struggling with a short amount of subsidy, of support, can it become competitive? So you can take those good things, but don't take the common agricultural policy, don't take the fisheries policy, you know, which has been, you know, 30, 40 years of ongoing subsidy to do something that's wrong. So I think it's exactly that, and it's trying to stop. It's trying to build intermediaries in as well, so that, you know, playing with the big boys in the international coffee market, you don't set up a cooperative to engage directly with that market, but you look for the intermediaries that will provide support when the project is over and you've withdrawn.
Okay, Christopher, did you just want to add something?
Yeah, one brief point, that there are certain sectors that really do lend themselves to smallholders within the business model. I think horticulture is often one of them. You mentioned onions, we mentioned flower seeds. You could think about beans in Eastern Africa. But it often presents buyers with a way of getting the diversity they need at quite low risk. So it's a good business model.
Okay, yes.
Hi, Nishi Agrawal from Clock Tower International. It's a little bit similar to the competition question just now. You mentioned that entrepreneurs should look nationally to build their businesses, which I agree with. But what do you do? Did you measure the impact from international businesses coming into a national region? For example, competition from China regarding manufacturing, where a lot of manufacturing producers were closing down in sub-Saharan Africa. Timber coming in from DRC, that was closing down. You know, what did you measure that, and were there any success stories how that particular environment may have picked up again?
So it's a really interesting question about international versus domestic. Which, Christopher, do you have anything to say?
We could talk about the two very strong examples from Southeast Asia, the calamansi citrus and the pangasius catfish. And in both those cases, the local producers, as I was saying in the presentation, were really running just to keep still, trying to supply these global markets where the standards were rising and rising, the costs and barriers to entry were rising all the time. And both of those projects re-strategized and started targeting local markets. So in the case of the calamansi, they processed concentrate and started looking at local supermarkets and local outlets very successfully. In the case of pangasius, they kind of downgraded. So instead of looking sometimes to very small producers supplying the global market, they looked at different ways they could diversify their production into the local market at far lower risk and far lower barriers to entry.
And Lindsay, from your perspective, how can DFID work with this idea? How do you know when to work with an international group that actually in bringing international markets or actually creating that domestic market for the long term? How do you judge that?
I mean, I think we open up competitions. We offer, we say the result that we want to achieve, and we open it up to companies to come to us and work with us. And it may be domestic, it may be regional markets, it could be international. So I think I don't think we are the ones who should be choosing whether, if we come in for 2 years, and although we tend to work on longer periods than that, but if we come in for 2 years and say you must now target this market, who on earth are we to
okay,
say
but is there any analysis that shows actually that when you open up a domestic market, that the bottom of the pyramid, producers are actually getting a better deal than if they deal with a big company? Is there any analysis that would actually know what actually works better for those people than for the companies themselves who are selling the products?
Well, I'm sure John and Chris are better placed, but I seem to remember reading something about that there being an assumption that those poor people linked into international supply chains would get a better deal, but actually I think there was a case study done of Walmart which said that actually that wasn't the case.
Jonathan, is there anything?
Yeah, I think we said it a bit during the presentation, but I think it's generally the development people have assumed that the best thing that could possibly happen to a developing country producer is to sell to the country that they're from. I mean, to put it crudely. And actually, I think that what we're seeing is a legacy. I mean, as the world is changing very fast, and I think our heads don't really cope with that sometimes particularly well. And actually, one of those changes is that I think the balance between supplying international markets and domestic markets, it obviously varies for different commodities. But I think the old style assumption that the South existed to produce stuff for the North to consume, I think it's going, and it's gone in a number of commodities already.
Okay, gentleman here.
Mark Napier, I work for CDC. Lindsay, you haven't said anything about CDC.
Sorry.
Or indeed
I did
other,
see you there, so I thought maybe you'd
or indeed other development finance institutions and the role
Yes.
that they play in supporting innovation. Because, and certainly in the division that I run, which is called Investment Innovation, I'm very clear that the money that I invest has to have some sort of market development impact in terms of boosting access or competition and so on and so forth. And I think that's critically important. I did want to push back a little bit, though, on this whole notion of not wanting to pick winners, because it seems to me that as DFID deepens its engagement with the private sector, DFID needs to be taking on, needs to be becoming much more accepting of risk and of failure. And I think in the interest of a bigger prize of understanding how donors can engage more with markets and the private sector, I think that is something that I think DFID needs to be able to justify. It needs to be able to justify those failures in the interest of getting it right. And I just
So
wanted
before
to
we ask Lindsay to justify failures or whatever, can you just talk a little bit about what do you see as the role of finance in terms of changing these markets? Because I mean, again, from the Guardian's perspective, working with Catino, we brought in these VSLA models where village savings and loans, where communities are actually saving as groups and then able to invest, which is a very tiny scale, but actually proving very effective. But how, linking up producers or whatever to finance is absolutely critical.
Well, I mean, it's finance and finance. I mean, if it's just mainstream finance and it's somebody's own capital, then it's very difficult to start imposing requirements on how they should spend their money. If it's a development finance institution, that's a different matter, and we obviously have a developmental obligation. We therefore need to think about the impact that we have on those markets. Whether that then extends to only doing deals in certain ways that have gender impacts and job creating impacts and so on and so forth is a debate that we will continue to have, no doubt, with DFID. And perhaps within the context of a large DFI, there's room to do a spectrum of things and to experiment within the range of financing instruments that we have. But so that would be my answer.
Okay, Lindsay, what are the boundaries of what DFID can do? You say you can't pick winners, but actually you need to understand the risks and pick the winners. Why not pick the winners?
Well, I mean, I think that when I say we can't pick winners, what I mean is we can't determine which are the what particular activities somebody should be doing in a supply chain, or how they should be engaging in a market. That is for businesses to decide themselves. We do. I mean, we open up our subsidy to competition. We allow companies to apply for subsidy, and we and so we do, in that sense, we pick winners. But Mark's absolutely right. There's a huge challenge, which is that can be very risky. And Donovan's earlier point, there are failures, and we've got to be able to admit that there have been failures and learn from them. And I think in many cases you do learn more from failures than you do from successes. So I mean, apologies. I don't think we do essentially we can be accused of picking winners, but I think what I mean is that we can't do what donors. We shouldn't be deciding business decisions. We should be sticking to our field of expertise.
Christopher, in terms of the book and your studies, did you have a look at where sort of relevant finance has really made a difference? So it's one thing asking communities to help themselves, but actually getting that leg up and that level of support. Have you seen where it's worked well and where it hasn't worked well?
Yeah, I mean, as most of you know in the audience, one of the real barriers to agriculture in developing countries is producer finance for inputs. And the majority of projects we work on in agriculture, one of the starting points at the production level, I mean, obviously we work all over the value chain, but at the production level is to try to take away this barrier to finance on inputs. We're working with the Gatsby Foundation at the moment, evaluating their cotton development program in Tanzania, which is a contract farming program designed specifically to try and remove barriers to credit for inputs. And as soon as you've removed that barrier, then you can link inputs with outputs. So yes, we do a lot of work in that area.
Okay, so.
Paul Simons, consultant in food security. You've mentioned quite a few times today, right at the very beginning, the measurement of success. Does it work? Does it not work? And then you mentioned that the amounts were quite small. You've also mentioned 3 or 4 times the $1 a day. Now, this goes back to the MDGs. In 2000, we talked about $1 a day, raising people above the poverty line. But the problem with the MDGs was it wasn't indexed. How do you, therefore, measure your success, taking into account inflation and bench currency fluctuations? Because the dollar today doesn't buy anywhere near what it bought in 2000.
Jonathan.
Thank you for that question. I'm sure colleagues can make a better stab at it than me, but my understanding was the $1 a day was at purchasing power parity in 1995, and so in fact there is creep. There's inflation in the international $1 a day poverty rate, and I think at the moment I understand that it's somewhere between $1.50 and $1.3. And that's really just taking account of the fact that what we're trying to look at is what will buy the same as $1 bought in 1995. Because otherwise, as you say, as the cost of living increases and poverty goes down, because clearly with inflation people earn more and every dollar buys less. So I understand there is an indexation within the international poverty line.
Okay, we're nearly out of time. Was there anyone else over to finish the Mexican wave? Yes, gentleman here. That's the last question, then we'll start to sum up.
Donald Curtis, an ex-academic.
I thought you could never be an ex-academic.
Well, I'm trying to demonstrate that by being here at the moment. I haven't heard much about institutions. I mean, markets always work within institutional complexes of one kind or another, which do various things for people, some institutions generated by the people themselves in protecting themselves or giving themselves security or sharing risk. And we have heard a little bit about that, but on the wider context about entitlements to access to land, to credit, to these things, you are curiously silent. And this seems to me where development policy should be heading, about framing the market rather than just championing market.
That's a very good question. Who would like to answer that first?
I can say, I absolutely agree with you that DFID has for several years supported a framework called Making Markets Work for the Poor, and that absolutely has, value chains fits within it, but it has the analysis that looks at the institutional framework, the policy framework that within which markets work. So we do quite a significant amount of work on that, and are increasing our work on that, and looking at service provision within markets, building markets of building the institutions that support markets. So. I absolutely agree.
Okay, Christopher or Jonathan, it's a really important point. So we see that markets which are not regulated, or where it's about championing markets, actually can create the very problems we're seeking to solve. How do we go about avoiding actually just making the problem actually worse by trying to make it better?
Yeah. Shall I have a bash at it,
Yeah,
Chris?
well, I'd like you both to have a bash at it.
Oh, good. Fine. I'll go first then.
Yeah.
No, I absolutely agree with what you're saying, and I think that conceptually in the approach that Lindsay was talking about, it is taken account of, and I cut my sort of development teeth in Southern Africa in the mid-90s, where there was obviously democratic transformation in the country, which involved an awful lot of changing of institutions to stop them oppressing one group of people and actually turn them to supporting a group of people. So I'm absolutely with you on the importance of that. I think that what we need to be careful of is imposing. I mean, there's a very difficult trade-off between becoming a sort of imperialist and saying, well, we know what institutions are right and how to do development because we've done it ourselves, and being too tolerant of gross abuses. And I think it's a horribly difficult line to draw. And I'm continually struck that in Vietnam, for instance, some Marxist-Leninist generals developed one of the most extraordinarily pro-poor growth scenarios that we've analysed. And it's not democratic, and there are human rights abuses, but it has lifted tens of millions of people out of poverty in 15 years. So I agree with you that institutions are terribly important. I think that acknowledging that you do actually face some really tricky, actually moral and philosophical questions. But just one final thing, what we're suggesting is harnessing the value, the power of markets to reduce poverty. This isn't some Tea Party extremist, take away all regulation, smash the institutions and let the market rip. It's absolutely not that in terms of our objectives, but also, you know, we've learnt from that. We've looked at Russia in the in its post-capitalist phase, and you can see that just smashing regulations, not bothering about institutions and letting the market go, actually has the reverse effect to the one that was intended.
Jonathan.
Christopher.
Sorry, Christopher.
Thank you. To some extent, I want to take that one on the chin and agree with you that within these kinds of programs, we're not very good at handling these larger issues. Partly, I think it's a question of scope. So in the same way that in a 2 to 3 year, 4 year perhaps program, which is typical for these kind of initiatives, we can't change the gender relations of the African continent. In the same way, we're not too happy about the way, for example, Ethiopian government hands out land to smallholders. But is that not a little bit beyond the scope of these kind of projects? And if that's the case, then whose responsibility is it to take on these issues?
Okay, we're running out of time. I always think it's okay to go 10 minutes over, so we've got 3 more minutes. So rather than asking the panel to sum up, I just want to find out if anyone, a couple of people amongst the audience who've just listened to the debate, have anything they want to, anything they'd like to say, just to sort of sum up from an audience perspective. So it'd be really nice for a couple of people who haven't spoken just to sort of offer their perspective on what they've heard and whether it leaves them more hopeful or actually less hopeful. Yes. Okay, and if you could just say who you are and where you're from first.
Ruth Bergen from the Trade Justice Movement. I'm afraid I'm left less hopeful because of the amount of things that seem to have been missing from what I've just heard. I didn't see anything like enough about what happens in terms of business models here. Luckily, we had the Body Shop here to talk about living wage. We saw through the ETI, yes, businesses were prepared to talk about health and safety because that looks bad if it's in a newspaper expose, but try and get them to deal with living wage. No movement whatsoever. Really disappointed in what you said about gender. I'd like to point you in the direction of home workers worldwide and women working worldwide who've worked with women workers who are in supply chains. How are they treated by markets? They're treated as numbers. They're not even recognised by their names. So please do go and do a little bit more work on that. Also disappointed by the lack of attention to the kind of global perspective. Nothing in there about how trade policy impacts on the ability of small producers to produce. Fish is a particularly good example. DFID has its own study there about women in particular and how they were impacted on when all of the fish was going into export. They were left with much poorer produce to sell. Their markets just disappear because they don't have the commodities.
Any other disappointments?
Well,
No. Well, and I think it's fair to say that, you know, this book is not trying to do everything. It's trying to focus on one area. But it's absolutely right to say, you know, we always need to have a broader perspective. But I would also like someone who maybe has that's one perspective. Any other perspectives or a more positive perspective? Does anyone here feel that working with markets, can actually improve? Which is the whole point of this debate. Is saying the debate was. God, I've lost my. It was basically whether markets can help sort of defeat poverty. Does anyone here feel hopeful? Yes. And then we're going to have one more very quick one, and then we've got to finish.
I'm Amos Dormos, and and
where are you from? Sorry.
I have an independent consultancy.
Great.
And yes, and I think that I'm very hopeful that markets can play a role. I don't think that markets on their own are the only answer, but I don't think development agencies on their own are the answer either. And one of the things that I think is absolutely crucial going forward is having people who can stand in the space between kind of the business community and the social community and translate that kind of space between the two. John mentioned kind of a bit of a convergence that's happening in language, but there's still massive divide, and often a challenge to the development community would be how many kind of business trained people do we have working in our organizations, and how many in the business community, how many kind of development trained people do we have kind of working there?
And that's a really interesting, you know, that's not an issue just in the South, it's an issue here in the UK, which is about the connectors that you need between business and actually disempowered communities, where often they get left out because they're not connected into the system and therefore automatically get left out. And gentleman right at the front for the last comment. And that's because you're very brave to have sat in the front. I think anyone who sits in the front row when you're so close to us is extremely brave. So the last word to you, sir.
Okay. Well, probably more positive. But
can you tell who you are, where you're from?
My name's Razib Chowdhury. I work for a company called Atos Consulting. We're one of DFID's suppliers in this space on making markets work for the poor and on value chains. The observation, and you asked about observation, 20 years ago I actually worked for what used to be in the UK government the Developing Countries Trade Agency, where the UK government worked on issues around supplier response in developing countries, and it was very much about industrialization at that time. But all the issues, in one sense I'm disappointed, it's taken 20 years to filter its way to the agricultural sector. But the hopeful part of it is 20 years ago, we had precisely that same debate within DTI and within what was then ODA at DFID, about focusing on markets, focusing on, and actually trying to address things at both ends. People talked about suppliers or producers. At that time, we focused on both ends, the supply response in developing countries, and also understanding what buyers in the marketplace wanted. And to take Jonathan's point about trade, there it was very much about big buyers overseas who wanted security around their supply chains. And the big case in point at that time was around the automotive industry, where they were buying bulk, they were looking for security, and they wanted reliability in their supply chains. And it meant countries like China, countries like India, and countries like Brazil, who had major industrialization drives, managed to actually integrate themselves. And as we know now, they've moved on considerably since that time. So I'm positive and hopeful that that kind of philosophy that DFID had 20 years back about markets and addressing market failure in those markets can be applied in the agricultural sector. And again, if you look at those agricultural economies that have made the BRIC countries and others in Southeast Asia that have made a major difference, it has been about looking at getting their smallholders and their small producers in the marketplace. The only caution
Last comment.
The only caution I have for DFID, and there is a recognition that I've seen with DFID that they understand that they have to engage in dialogue with the private sector, is ensuring that within the organisation itself they get the right kind of people. We have found, even in doing the M4P work and the value chain work, that a lot of the advisors in DFID, and they come from a livelihoods background, and to get them to focus on issues around commercialism, around risk, and understanding the risk to business of engaging with their supply chains, that they need to be aware of that in effectively designing their intervention.
Which
But
comes down to the old point, you can have as many theories of change as you want, but at the end of the day, it's the people who make it happen or not.
Absolutely.
And the skills they have. Great. We've run over, so I apologise for that, but I hope it was useful to carry on the debate. Congratulations on your book. Thank you. It's been great to open up the debate, and I hope you've all got something from it. So thank you very much.